Well, regulation is a trending topic in many sectors of the property industry, and joining me to discuss various elements of this, I'm delighted to once again welcome Stephen Johnson, MD of Shawbrook Bank. So welcome, Stephen.
Hi, Vanessa.
Now, interesting times, because we've had this recent EU directive come down the pipe. They've tried to meddle in these affairs before, but they've actually got something through now which concerns accidental landlords and the regulation of their mortgages. And I wondered if you could give us sort of some clarity on what exactly this EU directive is, because some of us are confused.
Sure. Well, I'll try. I think sort of the history to this journey is that clearly, the EU is trying to harmonise mortgage regulation across the common market, and a lot of what they're basing their regulation on is actually what the UK has done through the mortgage market review. So the basis of the European regulation is actually the UK, and based a lot of it on the MMR that was recently launched. Now, at the outset of the European sort of move to regulate, and we will all be caught by this under law. Mm-hmm. So, it's not something that we can opt out of. It's kind of coming. And the first cut of the directive, all of buy-to-let was caught. Now, clearly at the moment, under UK mortgage regulation and MCOB, buy-to-let and business lending is excluded. There was a big activity and a lot of lobbying that went on from the industry to get buy-to-let excluded, recognising it as a completely different market to kind of a consumer home loan market. And that got withdrawn from the mortgage directive, and therefore everyone thought that lobbying had been successful. And then only 2 weeks ago, there was a U-turn, and ultimately now a kind of a compromise has been reached in that some what are being called sort of accidental landlords or consumer landlords who are not experienced business people will be caught under the EU mortgage directive, and therefore lenders will have to go through an appropriate process and advisors will have to go through kind of a prescriptive process to arrange mortgages for those types of customers. Now, what does that customer look like, and what's an accidental landlord or a consumer landlord versus a professional landlord? We don't yet know. So to be fair, everybody's a little bit in the dark. But the EU mortgage directive comes into force from the beginning of 2016. And one of the things it does is harmonise between first charge, second charge, third charge lenders. So at the moment we have a whole process. If you take a second charge on a property that's different to a mortgage, that distinction will disappear and there'll just be one process for mortgages. Mm-hmm. And that does involve things like a calling off period. There'll be a European sort of illustration. There'll be European sort of formats of documents that you'll have to have. It'll be very prescriptive. So there's a big bottom line is kind of some consumer and sort of more amateur landlords get caught by that.
Okay, and do you foresee that this is just a sort of precursor to actually the EU wanting to completely regulate buy-to-let and bring it in line with residential mortgages?
I think certainly that was their intention. That's why at the outset buy-to-let was included. Obviously the industry lobbied hard to have it excluded, recognising that it's a discrete market with its own, it's a sophisticated market that doesn't need sort of the same sort of level of regulation as a consumer home loan market. And they originally won that battle, but then obviously it's crept back in. So that tells you kind of what we need to know really about really the desire is for all of it to be caught. The UK's got a very healthy, buoyant buy-to-let market. Other European countries don't have quite the same markets, so there's a lack of understanding of it a little bit on the continent. And unfortunately, we're kind of, clearly being told how to regulate our buy-to-let market, which has been a high-performing, high-quality market that would probably, the regulator hasn't so far shown it regulated as a product or a market because there's not been a need to.
Okay.
Like other areas of consumer credit where there has been some evidence of customer detriment, and it's become quite topical, areas like payday loans and other forms of unsecured lending, hence why the FCA now regulates consumer lending. So yeah, definitely on their agenda to get an increasing oversight of that market.
Well, could we move now, Stephen, to talk a little bit about landlord regulation, because that's becoming an increasing issue, mandatory licensing of landlords. And I'd like to hear your point of view or your perspective on this, because as a lender, I would imagine that you want to lend to a landlord that's going to run their property business to professional standards. But then it's interesting that NatWest have said they won't lend to any landlord in Newham in London because they don't want to be caught by mandatory landlord licensing if a property becomes repossessed and they have to go through that process. So it seems a bit of a double-edged sword. Where's Shawbrook sitting on this issue?
I think, like most regulation, is well intended, and we all want high quality landlords as it becomes an increasingly important part of housing in the UK, and I think that's to be applauded. My fear is that all of the good landlords will adapt, and it will inevitably add some cost to their business. And in an environment where yields are falling and interest rates are going to go up, that cost will have a big impact on potentially cash flow for the landlords. And what kind of oversight will there be for the bad landlords who don't go into the licensing regime and continue to provide poor quality accommodation and sort of tarnish the reputation of the market? So my real fear is that it'll add cost. The good landlords who do a good job today don't need it, but they'll be the ones that probably subscribe, and the poor landlords will avoid it, and they'll continue to operate really.
Yeah, it's really how much it's enforced is really going to be how effective it is. So can you ever see the day, Stephen, where you might prefer to lend, or you would check whether a landlord that had applied for finance was a member of a landlord association or had the necessary licences if it was a mandatory borough or council?
Yeah, I mean, apparently we rely quite heavily on our valuer to make those inquiries local authorities. Then the valuer needs to sort of it's his responsibility to make us aware of that, and then we would expect our landlords certainly to be compliant with that. We only lend to professional landlords, and clearly if the landlord providing poor quality accommodation, we'll know that through the valuation process, and that wouldn't be a loan we want to support anyway. So the truth is, the quality and the profile of our borrower and client is such that they would be they would be very much part of selective licensing, and if they weren't, then it probably would preclude us from lending.
Okay, so anything else you'd like to say about on the topic of regulation as we close this out?
No, I think other than I think the financial services industry as a whole is on a journey towards greater regulation on the back of the crisis, and that's happening. That train has left, and it's full of momentum. So I suspect all the participants in the market need to be ready for seeing a greater amount of regulatory kind of oversight. And whether we like it or not, it's here. It's here to stay. And arguably, you could see a case where all of property lending will be regulated, irrespective of whether it's business or consumer, at some point in the future. I suspect that day will come.
Well, very interesting to hear your views, Stephen, and thank you very much for sharing them with us.